day, all. Ira Epstein with your morning flash news update. And this is for Thursday, the 21st of September, 2023 at 8:10 a.m. Central Time. So how did you walk away yesterday from the Fed meeting? I can tell you what I felt. Number one, they're not as data dependent as they say every time because the data didn't warrant sitting still. If you look at today's jobless numbers, the claims, you will see I'm right. We're back to the lowest numbers since January of this year. So that's going back, 9 months already. And the labor market is strong as can be. So why would you want to pause? On the other hand, they're understanding. Patience, careful. How often did you hear that in yesterday's statement? So what the Fed is doing is they're crossing their fingers, hoping that the weight of the market on its own, and that could happen, by the way, will keep inflation from going up and start the long journey back down. And that the restrictive policy of keeping 5.25%, 5.5% rate will do the job. Now, today we saw the Bank of England come out this morning, do nothing. We saw Sweden go up, Norway go up, Turkey go up. Turkey went up 500 basis points to 30% as President Erdogan is finally letting an economic team take control and get back into the graces of the whole world community in economics. His other plans were just, frankly, always questionable. But now we've seen the other central banks in Europe joining the ECB, and maybe this is their last point. What do I think? I think that we're closer to the very end of this than I've ever said. I think we're about there. What I do believe is that real rates, ex the Fed, real rates are going to keep climbing. Why? Because our Treasury Department isn't through taking all the money out of the system. Where are you today in the 10-year? Well, just take a look. Look at the bonds. You've been to this is the 10-year, 108.08. You're up 5 off the low, but you hit 4.45 right in that percentage zone. These are new highs for the move. 2-year moving higher as well. Energy prices have come off a good break. In all fairness, I told my traders that I told them to buy this market on this break, and today I told them, I don't like the trades. I think we come out and give the market 24 hours and see if momentum stays up. I'm just sharing with you what I told them. In the grain markets, I don't see how they don't go for their harvest lows now. With the dollar as strong as it is, you're not going to see more export business. Go for the kill. In addition, the Mississippi River is so low that once again, you got to get barge restrictions. You don't tie as many together. You don't fill the barge all the way up, and that costs more money, and that's another negative. The farmers have just been beaten up by hot weather, getting their harvest in, and in many cases, they're going to find transportation costs are off the roof. When you look at the metal markets, I said yesterday, if the Fed gets interest rates to go higher, that would pressure these markets. You're looking at it. So have I changed, and we'll come to the news of the day in a minute, but this is an important update. Have I changed my opinion that the weakest month of the year is September? No. Have I changed my opinion that I said here that typically the weakest week of the year is this week? No. Is the market doing that? Yes. Will I stay with my idea that I think October is going to be a transition month, and then going into year end, the naysayers will come back, use the break to buy? Haven't changed my opinion on that either. So those parts of what I'm saying are very much in play. Now, here's the news. The Philly Fed market, they expected flat. They got a negative 13.5. Now, the good news is, in its own way, the prices paid are much higher. The employment index fell a fraction. Your order index, this is a negative, down 10.2. So everything's, again, in trouble right there, except the inventories is climbing. I don't know what that means. It sounds to me like they're not able to get the goods out. That's number one. They're sitting there, and they're not moving. Their business activity slipping away on them. In jobless claims, the market was looking for up 5,000. They got down 20,000. Jobless claims. Last week's were at 1688. Now we're at 1662. So it's not only the continuing claims, the new ones just keep going like this, that's not a weak labor market, and it means you're not going to get a very hard recession, typically. Now, the key is to not get rates going higher to break the economy. We'll see if that happens. Existing home sales are going to come out this morning at 9. The Conference Board's going to update their leading, lagging, and coincident indicators at 9. We get the EIA energy. Speaking of energy, it looks as though in Australia a deal's done between Chevron and the unions. The unions have to vote on it. Chevron has accepted it. If they don't, then it goes into Sydney, and then the arbitrator forces a deal on the unions and whatever Chevron has to take as well. However, generally how these work is when an arbitrator gets one side to agree and the other doesn't, if you've ever been in an arbitration, you got a problem, a big problem, because the arbitrator has full discretion. He'll say, those people were being very reasonable. You're not. You're going to take what they got, and that ends it. Do I like what the referees do in their labor boards? I love it. It's better than our system from the looks of things. Speaking of that, it appears that the screen guilds, the Writers Guild, made a very good progress yesterday. They're meeting again today. Why do I say it's good? Number one, I'm not privy to anything. Number two, I applaud them. Both sides walked out and didn't talk to the press. That's how you do a negotiation. You don't negotiate as the UAW is doing it the way they're doing it in the public eye. Because you know what that does? It emboldens the leader. It's his 15 minutes of fame. And he's not going to give up on it. He's going to show you. Well, these two sides are being quiet. With any luck, they're meeting again today. Let's keep our fingers crossed. Everybody needs a winner, and that's what we want to see in this. So things in the world are happening in some instances on a good note. I did a big write-up last night on my thoughts in the marketplace. And as I was doing them, I came in today and I was trying to say to myself, what do I think we're going to walk in the morning? One of the things I pointed out was the yin-yang impact. The Fed Eastern Time gives its announcement. What time is that? 2 o'clock in the afternoon, New York time. Is it 3 in the morning or so in Tokyo? In Europe, it's 8:30 at night, 8 o'clock at night. Okay, nobody's in the office in Europe and they're sleeping in Asia. So in the morning, you get the yin-yang. Asia reacts one way. Europe looks at what America did, but realized the night markets don't mean much. They react. It comes back to America. You get an initial reaction, and then today really sets the tone for what everything sets in. That's the way you look at it. I offer this and a lot more tutelage and trading ideas in my full research. If you'd like to see a free copy of it, get a couple of weeks of it. All you need to do is go to our website, iraepstein.com. Or move your cursor up here. You'll see an icon. Give it a click and take advantage of some of the other offers. Take a look at price counts. It is something if you're a technician, you've probably not seen. I think you'll fall in love with them. I'm Ira. I'll see you at the end of the day. Thanks for watching.